Assalamu alaikum and welcome to Islamic Finance TV's final featurette on Accounting and Auditing Organization for Islamic Financial Institutions, AAOIFI Sharia Standard number 62. In a global financial system constantly seeking ethical alternatives, Islamic finance offers a compelling model. At its core are Sukuk, not just Islamic bonds, but unique instruments of real-world investment. Sukuk are designed to connect investors with tangible assets and real economic activity, a world away from the interest-based debt of conventional bonds. Guiding this rapidly growing multi-trillion-dollar market is the Accounting and Auditing Organization for Islamic Financial Institutions, or AAOIFI. For over 2 decades, their Sharia Standard 17 has been the benchmark for investment sukuk. Now, AAOIFI has proposed a significant evolution, Sharia Standard number 62 on Sukuk. It's a move designed to enhance transparency, strengthen Sharia compliance, and ensure Sukuk remain true to their Islamic finance principles. But this proposal has stirred a hornet's nest, drawing pointed criticism from major global rating agencies like Fitch, Moody's, and S&P Global. They're warning of market disruption, higher costs, and a potential chilling effect on Sukuk issues. Today, we unravel this critical debate. Are these concerns justified, or do they stem from a fundamental misunderstanding of what Sharia-compliant finance truly demands? We'll delve deep, prioritizing the Sharia perspective with insights from leading scholars, practitioners, and AAOIFI itself. To understand the controversy, we must first understand Sukuk. Unlike a conventional bond, which is a loan an investor makes to an issuer in return for interest payments, a Sukuk certificate represents an undivided beneficial ownership stake in specific assets, a project, or business venture. Returns to Sukuk holders are not prefixed interest, but a share of the profits generated by that underlying asset or activity. This adheres to core Sharia principles like al-Kharaj bi al-Daman, gain accompanies liability, and al-Gun bil-Hurm, one can only earn a reward if one is prepared to bear the corresponding risk. As the Secretary General of AAOIFI, Omar Mustafa Ansari, emphatically stated in an interview with Islamic Finance TV,
we need to understand that Islamic finance is different. Islamic finance is different from conventional finance. And if it was not different, it was not needed. Conventional banking was already there. Conventional bonds were already there. Why you needed Islamic finance? You need it because we as Muslims have a set of Sharia conscious investors, stakeholders who believe that they cannot go to the conventional instruments, conventional banks, conventional institutions, because that is again against our fundamental beliefs as Muslims, that it involves prohibited transactions. So Islamic finance evolved because it was different. But I have another strong view. I say that if it is not different, it is not Islamic.
AAOIFI's standards are crucial in maintaining this distinction, ensuring products are not merely conventional instruments cloaked in Islamic terminology. Sharia Standard 17, issued in 2003, laid a vital foundation. But the Sukuk market has grown exponentially. New structures have emerged, and varied market practices have developed. AAOIFI recognized the need for an updated, more comprehensive standard. Omar Mustafa Ansari explains the impetus for Sharia Standard number 62, or SS62.
When it was developed, Sukuk industry had not evolved enough. It is 20 plus years old standard. Sukuk industry was in the initial stages. Lot of new products and services in the name of Sukuk that are actually introduced later were actually not there, and you learn from your experience. Additionally, Sharia Standard number 17 was leaving so many things to the respective Sharia standard. This standard also leaves those things to the respective Sharia standards, but it tries to bring all the things in one place so that maximum of the information needed for Sukuk is available at one place.
So, SS62 is not about reinventing Sukuk, but about refining their structure and application to ensure deeper Sharia authenticity, greater precision in areas like asset ownership, and clarity on risk sharing. Two areas in SS62 are central to the current debate: the nature of asset ownership and the bearing of risk. SS62 places strong emphasis on the effective transfer of ownership of the underlying Sukuk assets to the Sukuk holders or their representative, typically a special purpose vehicle or SPV. It mandates that this ownership must be acceptable under both Sharia and law, and crucially, it must result in the Sukuk holder's ability to dispose of the assets, bear their risks, and be entitled to their returns. The standard says there should be no absolute prevention of recourse to these assets. SS62 also details that Sukuk assets should ideally be moved off the originator's balance sheet and onto the Sukuk's or SPV's balance sheet. If legal or tax reasons prevent this, the standard imposes strict conditions to ensure Sharia ownership is still substantively upheld. This includes having a counter document proving the Sukuk holder's title, ensuring the originator doesn't appear as the owner to third parties, and that the structure doesn't simply create a debt obligation for the originator. Ahmed Ali Siddiqui, head of Sharia compliance at Mizan Bank, one of Pakistan's leading Islamic banks, underscores that this isn't a new invention.
लेकिन अगर बुनियादी तौर पे देखा जाए तो ये जो डिमांड है ये पहले से शरिया स्कॉलर्स की है और अब इसको आईओफी ने एक तरह से दोबारा से इसके ऊपर जोर दिया है कि जब एक एसेट की बुनियाद पर उसकी ओनरशिप सेल की जा रही है सुकूक के थ्रू, तो ऑब्वियसली ओनरशिप का रिस्क भी और ओनरशिप का टाइटल भी इन प्रिंसिपली सुकूक होल्डर्स के पास ही होना चाहिए या उस एसपीवी के पास होना चाहिए। हाँ, अगर उसमें कोई कानूनी रुकावट है, कोई टैक्स का मसला है, तो उसके मुतबादिल हल भी हैं जो आज तक इस्तेमाल हो रहे हैं और हो सकता है, और हमें बल्कि उम्मीद है कि आईओफी उस हलों को अलाउ भी करेगा।
Furthermore, SS62 explicitly states that Sukuk owners share in the reward, hun, as well as the liability, hurm, of the underlying assets. This means if the asset performs well, holders benefit. If it underperforms or incurs losses, barring negligence or misconduct by the manager, the holders bear their share. This is fundamental to avoiding interest. This push for greater Sharia purity has not gone unchallenged. Major rating agencies have voiced significant apprehension. When we contacted S&P Global about their concerns, they shared, some jurisdictions did not adopt the AAOIFI standards, and as such, Sukuk issuances in these jurisdictions may follow different structures versus the structures that would be potentially used by AAOIFI adopters. Standard 62 proposes, among others, the effective transfer of the Sukuk underlying assets to the investors. While this is not required for the current Sukuk issuances, their primary concerns include market disruption and fragmentation. They fear a potential slowdown in Sukuk issuance and market fragmentation if SS62 is adopted unevenly. Fitch Ratings mentioned, some issuers chose to leave the Sukuk market and stick with bonds, even after the less transformative Standard 59. Increased costs and complexity. S&P Global anticipates that implementing standard number 62 could make Sukuk more expensive than conventional issuances due to asset registration costs. Altered risk profiles. The agencies argue that if Sukuk holders bear more direct asset risk, it changes the investment proposition. S&P suggests Sukuk might be seen as asset management products, exposing investors to fiduciary risk rather than credit risk, or if repayment relies solely on assets, they could be akin to securitization. Ending positive. Legal uncertainties. Fitch highlighted concerns over uncertainty over recourse, enforcement, debt ranking, and recoveries in jurisdictions lacking bankruptcy precedents for such Sukuk structures. In their response, Fitch Ratings further stated that introducing asset-backed or quasi-equity structures could expose Sukuk investors and issuers to additional credit, market, legal, operational, and liquidity risks compared to conventional bonds. So, essentially, the agencies are signaling that if Sukuk become less like the debt instruments they are familiar with rating, the market could face significant adjustments. However, Islamic finance experts offer a different lens, one grounded firmly in Sharia. They acknowledge practical issues but champion the underlying principles of SS 62. Mufti Syed Muhammad Abu Bakr, resident Sharia board member at Dubai Islamic Bank, Pakistan, views potential disruptions as part of progress.
तो मार्केट डिस्ट्रप्शन किसी हद तक तो होगी और आई थिंक मतलब ये दुनिया में हर जगह होता आया है कि जब भी चीजें आप प्रैक्टिसेस को इम्प्रूव कर रहे होते हैं तो जाहिर डिस्ट्रप्शन असल जो कोर हमारा है सुकूक के अंदर भी कि दिस इज डिफरेंट एसेट class and asset type from conventional bonds.
Ahmed Ali Siddiqui of Mizan Bank emphasizes that the core demands of SS 62 are not new to Sharia.
एक कंसर्न ये है कि ये सुकूक स्टैंडर्ड कहता है कि अगर कोई सुकूक किसी असासे यानी किसी एसेट के ऊपर इशू किया जाए तो आइडियली वो असासा या उसकी जो ओनरशिप है, उसका जो लीगल टाइटल है, वो सुकूक होल्डर्स की तरफ मुंतकिल हो या जो एसपीवी सुकूक इशू कर रही है यानी स्पेशल पर्पस व्हीकल उसकी तरफ मुंतकिल हो। अच्छा, ये उसूली तौर पे ये बात बिल्कुल सही है।
Mr. Siddiqui also pointed out that solutions for legal and tax hurdles, like the Trust Act in Pakistan, already exist and are Sharia compliant. Both experts argue that true Sharia compliance will enhance, not diminish, long-term investor confidence, especially among those seeking authentically Islamic products. They also suggest that it's the rating agencies that might need to adapt their models, rather than Sharia principles bending to fit conventional frameworks. AAOIFI, through its Secretary General Omar Mustafa Ansari, stands firm on the Sharia foundations of SS 62.
Their frame of mind is that they believe that the fundamental methodologies that they use are about rating the credit worthiness of the obligor. They believe that the main investors or the main stakeholders who are there, they are concerned about the credit worthiness, and the sukuk should be structured in a way that the direct liability of the party, like a conventional bond, should be established. We believe that this in most situations is not possible, and if it becomes possible and a credit is created, then the sukuk is not tradable. Because you cannot, this comes into then sale of debt. So we believe that fundamentally sukuk has to originate its return and principal repayment out of the underlying assets or underlying venture.
Mr. Ansari highlighted that the industry will die argument is a recurring one that has historically proven false when AAOIFI introduced stricter standards. He stressed AAOIFI's consultative process and willingness to take time to address genuine concerns, but within clear Sharia parameters.
But one point is clear. We are not here to compromise on the core Sharia principles and rules. This is like, what you say, that it's the end point where we cannot have any more compromise. We need arguments that can convince my Sharia board. I don't need an argument, oh, it will die. Sorry. This is not a good enough argument.
On concerns like sovereign sukuk, Mr. Ansari was confident that Shariah-compliant solutions, such as using specific SPVs or usufruct-based structures, are available, and that countries possess ample assets to back sukuk issuances. So where does this leave us? The concerns of rating agencies about initial costs, complexities, and legal adjustments for SS 62 are practical market realities that need careful navigation during any transition. Uneven adoption could indeed cause temporary fragmentation. However, many of their deeper anxieties seem to arise from applying a conventional debt assessment framework to an instrument that SS 62 is trying to make even more distinct from conventional debt. The Sharia imperative is for sukuk to represent genuine asset participation with all its attendant risks and rewards. The risk that Sharia seeks to eliminate is riba and excessive gharar, not the inherent business risk of owning an asset. To shift towards more pronounced asset reliance, which troubles some conventional analysts, is precisely what Sharia scholars see as a corrective measure, ensuring substance over form. For the Sharia-conscious investor, This increased authenticity is a feature, not a flaw. AOFI's Sharia Standard 62, still in its draft phase and undergoing further consultation, represents a bold and necessary step to ensure the Sukuk market remains anchored to the foundational principles of Islamic finance. While the path may involve adaptation and overcoming practical hurdles, the pursuit of Sharia authenticity is paramount for the long-term credibility and distinct identity of the Islamic finance industry. As Omar Mustafa Ansari assures, AOFI is committed to taking the industry along, but not at the expense of its core values. The coming months will be crucial as dialogue continues. What is clear is that this standard is pushing the global Sukuk market towards a future where its Islamic identity is not just a label, but a deeply embedded reality. Thank you for joining us on Islamic Finance TV. We'll continue to follow this vital story. So keep watching our YouTube channel, subscribe, like, and share our content. Until next time, wassalam.